Okay, we're here with Adam Snabel and Casey Van Elkin of the Adam Snabel Mortgage Team. They are kindly agreeing to come and talk to us just about what is involved in getting a mortgage, all the questions people have surrounding this topic, which I know from experience. I've bought many houses myself. I know it can be really confusing. It's definitely something that you want an expert to help you with because there's so many questions and we have Google, and Google is great, but Google is not always the answer. So let's just start by saying, kind of just introduce yourselves and just tell us, how did you get into mortgage lending? What kind of was your path here? And then how did you guys become a team? So we can start with Adam.
Yeah. So my name's Adam, and got into mortgage. I fell into mortgage, let's just be honest. I was working for a closing attorney at the time, delivering loan packages back when you delivered closing packages, not emailed them.
Physical delivery.
That's how old I am.
Yeah.
I'll be, yeah. I was delivering a post-closing package to the bank, and a lady asked me if I would like to get in the mortgage business, and I said, well, that's interesting. I didn't know what a mortgage was.
Yeah.
A week later, I called her back, and she told me that some of her folks make X number of dollars a year, and it got me really excited, which was not a lot of money, I promise.
Just more than you were making at the time.
100%
Right.
more. But the funny part about that is that I thought it was a salary. It wasn't. It was eat what you kill, I guess.
Oh.
So anyway, I realized that, and I told my wife, and she goes, well, you better go start selling.
Yeah.
So I did. Still here.
And you're still here.
Yep.
And how many years ago was that?
2003, so this is 2025, 22 years, 23. Yeah.
Okay. And what about you, Casey?
Well, I have a sort of similar story. I was working at an attorney's office, but I was looking for another job. My husband was a mortgage insurance representative, and he visited Adam and his team, and he helped me get the job. That was about 8 years ago.
Okay.
I started Green. I had never worked in mortgage. I didn't know anything about it, but they were very gracious to take a chance on me. And a couple years later, a spot opened up on Adam's team, and I jumped at the opportunity. That was 5 years ago. And
amazing. And here you are.
Still here today.
Well, that's great. Well, we're so thankful to have you. Let's just kind of start with some basic questions about the mortgage process and kind of what's involved. So it sort of tends to be all about rates in people's heads, right? Everyone is sort of obsessed with interest rates when it comes to buying a house, and understandably so, because it can really add a lot to what you're paying, or it can really be, a benefit if the rates are lower. So I think people's first question sort of tends to be, well, what's your rate?
Yeah.
So talk to me about, is that a good question to ask, or should they be starting with something different?
I think it's a great question to ask, but I don't think that's the only question. Let's go back to 2003. When we had rate sheets and we would go drop off a rate sheet, it was a one-size-fits-all approach.
Yeah.
And so today, there are what they call Fannie Mae, Freddie Mac loan level pricing adjustments. And so it's an adjustment based upon the risk of the buyer. Yeah. And so many things go into rate, okay? Stuff like loan to value, product type, credit score, property type. Are you a first-time home buyer? Have you bought a house before? I mean, there's just so many things. So, without having a full picture, it's impossible to quote somebody a rate.
Yeah. Okay, so when people are shopping around for the lowest rates, is there anything that they tend to miss in that process? And what would you say it is?
Absolutely. So the one thing that I want to make sure people understand is we can pretty much give you any rate you want. Okay. It's the cost behind the rate. And so, you can get a making up, but you could get a 5% rate, and that may cost you 5 points. Yeah. Right. Yeah. You can get a 6% rate, and it costs you nothing. Yeah. So it's all the cost behind it. And so a lot of times when people go to Google or they go online, it just happened to me yesterday. The guy told me, well, my bank gave me this quote. Yeah. Well, when I actually got the quote back, they gave him that rate. They had points attached to it. Yeah. My rate was a quarter higher, but there were no points. So you have to look at that. Is it cost effective to pay that kind of money up front to buy the rate down? You know? So that's a big thing. The other thing I want to point out is that for some reason, there's a misconception that Bank A, mortgage company B, Bank C, that, they're just making up their rates. Yeah. Okay. Everybody gets water from the same well.
Right.
Okay?
Right.
And everybody takes these loans, they package them, they pull them together, and they're sold on the secondary market for the same price.
Yeah.
And so you're not going to find somebody that's got drastically different rates than someone else. Yeah. Unless they're just not in the market.
And for people who may not know, where are the rates coming from?
Well, the rates are coming from, so a lot of it is going to be the 10-year Treasury yields. Okay. 10-year Treasury yields seem to have the the biggest influence on the rates. But I mean, this is all like mortgage-backed securities. This is all secondary market. This is uber complicated. I'm definitely on the sales. I'm on the front end.
We could do a whole podcast
on that topic. Podcast on
okay.
that topic.
But the point is, you guys are not sitting down every morning going, what are our rates going to be today?
Yes. No. Okay. We're not doing that.
Okay. So I know, kind of along the same lines, I know that there's lots of different types of loans, right? There's lots of nuance to how those loans are structured, and that can have a huge impact on someone's long-term wealth, monthly cash flow, lots of different things. So I know that's also that could probably also be its own podcast. But if you can kind of walk us through how different loan structures can make a huge difference in someone's life.
I love the question. So what I typically do with every single client is I ask them two main questions. Okay. What is your monthly payment goal? What is your stretch goal? Okay. And what's your cash position? Okay. Are you better off, using this cash that you have to put all down onto a house? Are you better off paying off, higher interest rate debt, investing it, putting it in your retirement account? And then, how does that transition into your mortgage structure, right? So that's kind of the biggest thing that I like to do. One thing to keep in mind, and I tell people this all the time, if you've got $50,000 and you elect to put $50,000 into a house, but you need that money later, it's hard to get it back. Yeah. And if you want to get it back, you possibly can get it back, but it's going to cost you. Yeah. You're going to have a higher interest rate because it'll be a HELOC or a second mortgage. Right. And so what I tell people a lot is like, a lot of times put in the minimum amount, okay? Hold your cash back. Because like if you decide a year from now, 2 years from now, that you've got this pool of money and you want to put down on the loan, we can recast it for free.
Oh, okay.
Yeah. And what that means is we can re-amortize the payment based on the new principal balance. Oh. And so it's easy to put money down later. It's hard to get that money back.
Oh, that's a really good tip.
And so a lot of times, like, use your money. If you've got X number of dollars sitting here in a pile, let's think hard. Let's think about what's it going to take to get us to that payment goal that you have. Yeah. And let's think about the other things that you can do with that cash.
Okay. So what you're saying, I'm just going to kind of rephrase this. What you're saying is, it's not necessarily better to put down a bigger down payment on the house.
100% no. For instance, let's say that you decide to put $100,000 extra down or $10,000 extra down. Let's go with the 10,000 scenario because so if you decide to put $10,000 extra down on a 30-year fixed loan, that may only knock off $50 or $60 to your payment.
Right. Whereas otherwise you would have $10,000.
If you took $10,000 and paid off a credit card with it, it might save you $400 or $500 a month, So it's
really a much bigger conversation.
Yeah. Right. Huge conversation.
And is that something that you guys talk people through? Are you sitting and talking through the whole financial picture and what kind of is the best move?
100%.
That to me is huge. Yeah. Because I think there's so much people are just focused on the loan for the home. And it's like, well, is that even the smartest place?
We love to pull in financial advisors. I mean, if people have, they have massive retirement accounts or they have savings or they have investments, a lot of times, I mean, just recently, we brought in a financial advisor and it was determined that you didn't need a loan from me. Oh. You should take the funds that you have and go buy the house in cash.
Oh, wow.
So, I mean...
But they wouldn't have been able to make that. I mean, that's a hard decision.
They were going to get a loan.
Yeah. Yeah, because I'm sure it feels like the safer option versus putting all of their cash.
And I really wanted to give them a loan too.
Yeah, I'm sure you did.
But it just wasn't the right thing to do.
Well, and I love that you were able to see that and were able to say, I'm not the right choice. I think that speaks volumes just about you guys as a company and just about your character. So when a borrower comes to meet with you and maybe they don't know anything about this process. Maybe let's pretend like it's their first time to buy a house. Is there a set of questions that you're thinking, I really want them to ask this, or this is what they should be asking?
Casey, I really want you to answer this one because you're good at this. You're good at this.
I think one of the most important questions you can ask is, when are you available to help me? Because we are available on the weekends. People are going to open houses on the weekends. Most people are working Monday through Friday, 9 to 5. They're looking at homes in the evening, Saturday, Sunday, and we're always available to help them then, answer their questions.
Well, let me say, how many times do we get a call on a Saturday or a Sunday and they go, I can't get my big bank on the phone?
Okay.
All the time.
I'm sure, because the banks are not open.
They're not.
Yeah.
And Friday at 5 is probably our busiest time of the week, I would say.
Wow. 3 to 5 on a Friday.
Wow.
Right when we want to go home too.
When those big banks are going home.
Yeah. And I want to go home too, but we don't. We stay.
Or we go home and we work.
Yeah, it's true.
I think that's great. I don't think I would have assumed that you guys were available, after hours or on the weekends. I think that's really helpful for people to know. I feel like I would assume the real estate agent probably is, because I know they want to make the sale.
They do.
Mm-hmm.
But I wouldn't have thought it about the mortgage team. So I think that's great.
I mean, another question that they should ask is, not only are you available, but how quickly can you close?
Mm-hmm.
In a competitive rate environment where we've been very competitive for the last 5 years,
right?
Is how quickly can we make that happen? And if you're not available, you're not making it happen quickly.
Yeah. So availability is a big issue.
Huge. Yeah.
Because I can see how that would hold people up if they can't get you on the phone, not you, but a mortgage lender. If they can't get them on the phone, they're not around for closing, they can't get you on the schedule, that would be a big deal. So what else do you feel like people should be asking? Are there other tips you would want a first-time home buyer to know?
Well, related to that, how can you help me get my offer accepted in that environment? Yeah. We've often had people who are putting an offer on a house that we've worked with the listing agent several times and they know we're going to deliver. And so maybe, make a phone call and tell them, their offer's good and it's going to close on time.
Yeah. Okay.
Because I'm old, I'm going to say this too.
Yeah.
Because how long have you been in the business? Experience matters in this business.
Yeah.
And so, 20 plus years in the business, we've learned so many things.
Yes.
And so I think a question that you should, as a first time buyer, asking your lender is, how long have you been in the business? How much experience do you have? Mm-hmm. I think in this business, it's really important.
Mm-hmm. Mm-hmm. I would agree. I would feel much more comfortable with someone who's been doing this for a while than someone who's very fresh. So as one final question for this particular segment, we've talked about some of the things people should be asking and what they should be looking for in their lender. What are some red flags in a mortgage lender?
You're making me talk bad about my competition today. Let's put this nicely. What are some red flags? Not being responsive, number one. Okay. And we talked about the availability, but just the responsiveness. I mean, and I'll apply this to realtors. I'll apply this to mortgage people. I'll apply this to anybody who works in the real estate business. Mm-hmm. If you call and they do not respond, call someone else.
Okay.
I mean, that's the number one.
So that's number one.
Number one.
Anything else?
What do you think?
Not asking you for any sort of documentation if you're putting in a serious offer.
Okay.
And just sending a pre-qualification letter over a pre-approval letter. If we have someone making a serious offer, we've typically reviewed their income, their assets, and we know that transaction is going to work out.
I've got one more.
Okay.
Asking for money up front.
Oh, yeah, that seems.
We do not ask for money, and people do. We don't ask for money up front.
Okay.
Those are the three big ones.
All right, that's good. Good advice. Okay, so this was our first video out of a whole series. If you are stopping by for the first time to watch this video, make sure you check out all of them. These are great conversations that we're having. Adam Snabel Mortgage Team, thank you for joining us today, and we look forward to next time.
Thank you.